Good afternoon, everyone. Welcome to the Midday Update. I am Laz. So much to discuss. The market's just been an absolute eruption. Fed coming out, doing their thing yesterday. Not totally unexpected, not really much of a surprise. And I think the market was just waiting for the verbiage before it, jumped into new highs, which we saw immediately post Fed announcement yesterday. So let's take a look at that as there's lots to discuss here. We're going to jump into the charts. Here are the S&Ps. This is our daily chart, and we saw that nice 4-day consolidation here after that large move from last week. Most of last week spent consolidating that move, and then yesterday just an absolute, breakout here. Technically, just very clean right through highs, and we haven't looked back. It is now 12:30 on Friday, and you can see that we made new highs again today. The market tailing down a little bit off of the intraday high here, but not a whole lot of selling going on. This is really more of just sort of the market taking a breather here. Let's take a look at a smaller time frame. This is a 13-minute chart to get an idea of what this looks like on a more detailed level. This was the Fed announcement. You can see we just absolutely, the market erupted. We got a pretty much an end-of-day base, and then this morning, again, new highs, buyers right back in. So we've seen a little bit of a pullback here since the 10 a.m. highs. I suspect that this might become a very choppy range-bound trade for the better part of the day. I don't necessarily know this market has a lot more power left in it after a huge move, which has really been, not just yesterday into today, but has been since 2 weeks ago, since we took from that 140. Now we're trading 148 in the S&Ps in a pretty short amount of time. This is just really a week and a half of trading. So very powerful move. We are now outside of our Bollinger Bands, which for short-term traders, can be a sign that a reversal could be, a reversal or a pullback, I think is the better way to say it. A pullback could be in the cards here. Not necessarily today, but maybe today, early into next week, Monday, Tuesday, Wednesday. Wouldn't surprise me if the market did start to pull back and, give up some of this, huge upside that we've had. There is, there is the possibility that this will pull back a little deeper than most people expect. Remember, we are coming not necessarily from, here, but, this move started back in June, and a lot of stocks have seen some very powerful surges with this. So I wouldn't be surprised, totally surprised if, this did start to pull back and maybe pull back even into the 21 EMA here, which is right around 143 now. So, a little more time. This again, the trade is still long, still continues to be that way. That's where money flow is. Apple. Post-Fed, we broke out again, ever so slightly getting through those prior highs from last week. And today jumping up again, now trading just a hair under 700. Intraday Apple to me still looks like higher prices in the cards here, just slowly starting to grind higher as we have now taken out our morning highs and starting to consolidate up here. If we can, consolidate a little bit more into the afternoon, you could see another surge higher, possibly as high as the 703 to 705 mark. So whether you're a day trader or swing trader, this trade's still very much intact. And these are blue skies. Blue skies meaning that these are all-time highs. We look at a monthly in Apple, and there is really no resistance here on this monthly, and this stock still continuing to probe upside. And just like I said, 700 may be just an hour or two away here if this pattern remains intact today. Some of the banks, Goldman, I think the most notable in terms of the move that it's had. This is a daily in Goldman. Big surge in volume. It's rare that a stock will trade outside of its upper or lower Bollinger Band for this many days. You can see we've been out of the bands for about 6-7 trading days, and we've come from basically 100 up to about 122.50 this morning was our highs, where we started to tail down. So the upside here might be capped in Goldman. It wouldn't surprise me. This has been a huge run. And some pullback and some consolidation will be necessary here, as we are way extended here off the 21 EMA and even the 8. So it wouldn't surprise me where we possibly close the day like this, and then Monday, Tuesday, Wednesday into next week we see maybe some lower prices, or we begin to see a couple of lower highs in the cards, maybe a 3 to 5 day pullback. Again, pullbacks are healthy and necessary in uptrends. The faster these stocks continue to rise, the more violent the downward pullback will be. So just be alert and be careful and be prepared for that. we do have a little bit of a topping tail. And if we go back in time, we look to the left, as I call it. We are back here into, and I'll just kind of draw this line. Hard to see because it's small, but back into this upper area of resistance. This is Goldman back from February, March, April of last year. And this is where this breakdown really did occur. So there's definitely going to be a little pause here, I suspect, in price, and like I said, over the next couple of sessions, you might see a drawdown, even to the 8 EMA here on the daily, which is around 116.50. So keep your eyes out for those traders. The banks have had a nice run. You don't want to chase price. You certainly don't want to chase this one. And I think that we could be on the lookout for a little mean reversion into next week. What else can we look at? We can look at Google. Google continuing to, all these pullbacks being bought, another 3-day pullback here, right back at highs as we speak. Prior highs were about 713. The stock's trading about 712 this morning. A rather muted session, I would say, in terms of the intraday, but nevertheless, this chart still remains strong, still remains good, still being bought at every pullback, and you have to stay with that trade until such time that something changes or we get some sort of candlestick that tells us maybe that we see a topping tail or some sort of big bar down, but that trade hasn't happened, and the market still continues to like Google and still probing upside. Amazon, another one. Again, look at this nice smooth trend here. New highs again in Amazon today. Tailing off a little bit, not much going on intraday, but again, the stock still continues to get bought on every short-term pullback. That has been the trade. Buying these, buying these 2 to 3, 4-day pullbacks and some of these strong leadership names has been the trade that has made people, a nice bit of money here in this run that we've had in the market. Market is a little extended. It wouldn't surprise me. If you participated in this long, probably a smart idea to lighten up, take off some exposure, take profits. You sell when you can, not when you have to. Just notable mentions to Mark Sperling, Scott Redler, some of the traders in the VTF who have done an outstanding job. And if you're not following them or listening to them real time, you really are doing yourself a disservice because they really have been on top of this move. As good as any trader can possibly ask for. With that, a planned trader is a profitable trader. Have a great weekend, and I will talk to you later.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.